So tell us a little bit about what the situation is in China. What are firms across the country telling you about liquidity and credit?
So there are a lot of people who think that in 2022, which is a party Congress year where Central Communist Party Congress will meet and say that Xi Jinping is the leader again, that the party will not tolerate a weak year economically. And that's a reasonable expectation. But they think that's going to happen through stimulus, that China was constrained in its monetary and fiscal policy this year, and next year it will be less constrained, and you'll get more money coming into the system. What our survey, which is over 3,000 firms, says is that hasn't started yet. It didn't start even in mid-December. So people are talking about it, they're expecting it, that's a reasonable expectation, but we don't actually have firms borrowing more to ramp up economic activity in 2022. Maybe that will occur, but it hasn't occurred yet. You just heard about problems in the Chinese financial system. China may be more cautious than a lot of people expect.
How long does it take for the transmission process to take effect? So if you actually allow more credit to be spread into the Chinese economy, how long will it take to actually see the benefits of it?
Well, obviously, that depends on how aggressive China wants to be. They have shown in the past that when they want to push the panic button, credit can spread very, very quickly, like within one quarter. And of course, you'll have a lot of optimism as people start borrowing that activity will pick up a quarter from now. I don't see that happening in this case. I think what China is looking is to have a better second half of 2022. The first half of 2022 could stay weak. And so I think what you'll get is targeted easing, not a large surge of credit. That's going to take longer to work as the People's Bank looks to see who's responding and who isn't. So I would expect that the impact of looser policy is more a July, August event rather than a March, April event.
Derek, is the fact that the panic button, as you put it, hasn't been pushed suggests there's nothing really to panic about?
Look, I think China's policy in 2021 has been quite wise. I think there are a number of countries, including the United States, have leveraged themselves into a difficult situation. So I'm not criticizing the Chinese for being cautious now. I think there is a risk here from Omicron. As we know, China practices a zero COVID policy. Omicron is very infectious. I can attest to that personally. And so it's going to be a challenge for them to hold to that zero COVID policy. And you may see more of these shutdowns of large cities for just a few cases. So that could cause economic weakness that the central government isn't expecting in the first quarter. So I don't want to criticize China. I think they're right not to push the panic button. But that doesn't mean there isn't a risk from COVID in the first quarter of 2022.
Well, let's talk about some of the other risks as well. Do you think the risks from the property sector to the broader economy have been effectively contained?
I think the risk has been contained. I don't mean to say the property sector isn't going to drag down the broader economy still in 2022, because it is. So I think there's a macroeconomic problem that China is still working through. You could say the property sector has nowhere to go but up, but it might not go up, and that would continue to be an anchor on economic growth. I don't think financial transmission of the property sector is a serious danger. You could have a major developer default, no question, but I think everyone's pretty much ready for that now. I don't think it'll come as a surprise and lead to assets which are difficult to value. So I think as a macroeconomic problem, property continues in 2022, but as a financial risk, it's pretty low.
Derek, you also follow geopolitical tensions closely. You're a commissioner at the U.S.-China Economic and Security Review Commission. Tell us a little bit about your expectations for next year, especially given that the expectations of easing in China happen because, of course, we do have the Party Congress in the fall, but at the same time, we also have the U.S. midterm elections around that time.
Right. I should say I'm speaking for myself now, not for the commission. But as somebody who does follow these events, if we had 2021 repeated in 2022, that would be good, because there was a lot of chatter back and forth between the U.S. and China, but not much real action. That's what we need in a politically difficult year. It's a big political year for China, having to do with Xi Jinping's future. How long is he going to be in charge? Is there going to be a designated successor? These are very sensitive decisions. It's also an important political year for the U.S. because you have a chance for the Republican Party to take both the House and the Senate from the Democrats. That may not happen. But the Republicans think that it could happen. They could be very aggressive, including on China issues. So, 2021 was more bark than bite. In 2022, if you start getting Republican aggressiveness, you could see a very sensitive Chinese reaction because of their own politics.